Getting a mortgage in Dubai as an expat is entirely possible, but it requires careful planning and understanding the local requirements. In this video, I'll walk you through the mortgage process step by step, ensuring that you're well prepared to secure a home loan in Dubai. Before we start, if you want to know if you can qualify for a mortgage, what monthly payments to expect, and the interest rate that you might get, you can complete our mortgage calculator at setuphero.com/mortgages. Now, first, it's important to understand the eligibility criteria for obtaining a mortgage in Dubai as an expat. Most banks require applicants to be between 21 and 65 years old at the time of loan maturity. For salaried individuals, a minimum monthly income of 15,000 dirhams is typically required, while self-employed applicants may need to demonstrate a higher income, often around 20,000 dirhams per month. Employment stability is crucial. Salaried individuals should have at least 6 months of continuous employment, and self-employed individuals should have been operating their business for a minimum of 2 years. Banks will also assess your credit history, any existing financial obligations, to determine your debt to income ratio, which should ideally be below 50%. Once you have confirmed your eligibility, the next step is to gather necessary documentation. This typically includes a valid passport, proof of residency, bank statements for the past 6 months, salary slips, and audited financial statements if available, and also details of any existing loans or liabilities. Having these documents prepared in advance will streamline the application process and demonstrate your financial stability to the potential lender. With your documents in hand, it's time to explore mortgage options. Dubai offers various types of mortgages, including fixed rate, variable rate, and Islamic, that is the Sharia compliant mortgages. Fixed rate mortgages provide stability with consistent monthly payment, while variable rate mortgages may offer low initial rates that can fluctuate over time. Islamic mortgages such as Murabaha or Ijara are structured to comply with Islamic finance principles that avoids interest payments, and it is advisable to consult with a mortgage broker or financial advisor to determine which option best suits your situation and long-term goals. And at Setup Hero, we also help our clients compare mortgage options, prepare documentation, and secure approval quickly. After selecting a suitable mortgage product, you should seek pre-approval from your chosen lender. Pre-approval involves the bank assessing your financial document and creditworthiness to determine for maximum loan amount they are willing to offer. This step not only provides clarity on your budget, but also demonstrates to the seller that you are a serious buyer, potentially giving you an advantage in negotiations. With the pre-approval secured, you can begin your property search in Dubai. It's important to note that expats are permitted to purchase property in designated freehold areas, which includes popular locations like Dubai Marina, Dubai Downtown, Jumeirah Village Circle, Business Bay, and Palm Jumeirah. Each of these areas have unique characteristics, pricing structure, and lifestyle offering. So take time to research what suits your needs. Engaging a reputable real estate agent can help you navigate the market and identify the properties that align with your preference and budget. Once you have identified a property, you will need to make a formal offer and negotiate the terms of the sale. Upon reaching an agreement, a memorandum of understanding will be signed by both parties, outlining the terms and conditions of the sale. At this stage, you will be required to pay a deposit, typically around 10% of the property value, to secure the purchase. The MOU also sets the timeline for completing the transaction, including the valuation and final bank approvals. Following the MOU, your lender will conduct a property valuation to ensure that the property's worth aligns with the agreed purchase price. This valuation is critical not only for mortgage approval, but also to ensure that you're not overpaying for the property. Most banks will finance up to 75% of the property value for expats. So if your valuation comes in lower than expected, you may need to cover the larger portion as a down payment. Once the valuation is complete and satisfactory, the bank will issue the final offer letter. At this stage, you will proceed to sign mortgage agreement, which will lock in the terms such as interest rate, repayment tenure, and penalties. It is essential to review all the terms and conditions thoroughly and seek legal advice if necessary. The next steps involves arranging the final payments and signing the property transfer documents at the Dubai Land Department. This process includes paying the necessary fees such as the 4% property transfer fee and a 0.25% mortgage registration fee. In addition to these government fees, there may be other administrative charges by the bank, the developer if applicable, and your broker. It is a good idea to keep a buffer for these costs, which can add up quickly. Once all documents are signed and payments completed, the property title deed will be issued in your name. At this point, the bank disperses the mortgage funds to the seller, and you officially become the owner. It's important to ensure you receive copies of all documents and maintain them in a secure place, as they will be needed for future transactions, insurance claims, or refinancing. After the purchase, some banks require you to take out home insurance and life insurance as part of the mortgage conditions. These policies protect both you and the lender in case of unforeseen events. Make sure to shop around and compare insurance providers, as banks may offer their own products, but you're often allowed to choose alternatives as well. It's also wise to understand how early repayment or refinancing works in Dubai. Many mortgages comes with a penalty for early settlement, often capped at 1% of the remaining balance. If you plan to refinance in the future to get better rates, make sure you understand these costs upfront. Finally, owning a Dubai property can also support your residency status. In many cases, property owner can apply for a renewable golden visa or an investor visa, provided that the property value meets the required threshold, that is 750,000 dirhams for an investor visa and 2 million dirhams for a golden visa, that is for 10 years. This adds another layer of benefit for expats looking to build long-term life in Dubai. So if you're ready to buy a home in Dubai and want to compare your mortgage options properly, you can go to setupHero.com/mortgages and complete the calculator. We will show you what you qualify for, what your monthly payments will look like, and which bank might be a good fit for you. And if you're serious about buying a property in Dubai, you should really check out my next video right here.